Hey, what's up, everybody? Should you be worried about what's going on in the market right now? What people are predicting in terms of recession and all of that? Let's talk about it. Hey, what's up, everybody? Today, I wanted to have a conversation with you about what's going on in the market. Today, I won't be reading from a teleprompter, so you won't see me with these weird eyes. But today, I wanted to just talk to you about what people are saying in the news and what you're reading online and all those things, and let's try to make some sense of where this thing is going over the next year to 2 or 3. So first, before we dive into what we should expect, I think the first thing we should do is kind of figure out how we got here. So the first thing we need to look at is the affordability of housing. Single-family housing prices have ascended or increased since about 2011 to a point where we're now at probably about a $325,000, $330,000 median home price across America, and that's huge. That's a pretty steep price for a home in this day and age when you got so many things that are going on around us. And not to mention, you throw in a pandemic where we've had a huge uptick in purchases because people have realized having your own space versus living in a space together or around other people in apartment buildings and things like that has become more important. Not only is it having your own space, but also having functional space to be able to entertain, to be able to work, to be able to have all the things, the creature comforts that you need in order to be able to survive during times where you're not able to go out and have fun. So I think the next thing we have to cover is inventory. Inventory has been at a record low number for a couple of years now, especially after the pandemic, because we've had so many people that have decided that having a home is more important than doing anything else. With low inventory, we're managing a supply and demand curve that just can't keep up with the pace of purchases. And to factor in mortgage rate increases. Mortgage rate increases are now here and are going to be a steady thing for probably the next 6 to 12 months until we get our arms around inflation. And as we talk about inflation, think about builders. Builders are now having to build homes, and it's costing them probably 35 to 40% more in terms of cost to build a home now. And when you think about the fact that you have so many buyers out there that are now starting to say, this is not the right time because of the interest rates, because of the cost, because of everything that's going on right now, you also have to understand that builders have to make a profit. And so they're not going to build homes to supply homes at a loss or even a smaller profit than what they typically go after. So I think there are a number of factors here that are making everyone feel very worried and rightfully so with all the issues that we've got going on. It's kind of the perfect storm for a recession. So keep in mind that real estate is a huge part of what fuels our economy. So if everyone stops and takes a pause and says, this isn't the right time for me, then what happens is our economy slows down and of course we go into a recession. Okay, so with all the issues I just explained, let's talk about how we shouldn't worry. I think you should be cautious, but don't obsess. I think the first thing that we need to understand is that pricing needs to and should and will stabilize. I think the big thing for us right now is that we need to ensure that we are putting our buyers in a good position to be able to comfortably buy homes and allow them to be able to still have good quality of life. And right now, as the pricing of homes continues to increase, we are not really in a position where we're making sure that our buyers are going to be happy if there is a recession or if anything does happen negatively with the economy. So we need the stabilization of pricing. I think one thing that's really going to be key in all of this is if you're an investor, being able to buy a property at a lower rate is also going to help your bottom line. Think about it. When you buy a house for 10, 20, 30% higher than what we probably could have 2 years ago, 3 years ago, I mean, think about the amount of interest that you're paying out on your home if you have to get a loan. I mean, this is huge. So we need pricing to stabilize. We need things to kind of go down to levels where, it's all kind of affordable for everyone. So the next point we need to understand is that more inventory is on the way. I know we've talked about the fact that builders are saying that they don't want to build any new housing stock or building less housing stock because of the elevated prices of building materials and the cost. Sellers that have existing homes that were looking to sell their homes prior to the pandemic are now coming on the market. They see that right now is probably the best time that they're going to have in terms of selling their homes and getting kind of one of these post-pandemic prices. But I think the good thing for us is that with those people coming on the market at this point in the cycle, they're starting to see that pricing is softening. So they're not coming out like gangbusters and expecting us to pay 10, 20, 30% over asking. They're really coming out and being more thoughtful with pricing that is kind of what we should expect for this point. And then hopefully, as it starts to soften a little bit more in line with what we really need. So I'm really excited about the new housing stock. I would love to see California in certain places get to maybe 2-3 months of housing inventory. I know that's a little bit fishy and probably not going to happen. But I mean, the good thing for us is that a wave of housing stock is coming to help offset what builders are not building anymore. The final point I want to talk about is that mortgage rate increases are going to stop soon. I mean, if you think about it, we need these increases so that we can slow down inflation. Until supply catches up with our demand that we have right now, until housing prices kind of subside a bit, like we need this to happen. And I know it feels tough, but I mean, in order for us to get back to a place where everything is more affordable, where we have gas that doesn't cost us 10 grand a month, I mean, like we really need these increases to kind of slow things down a bit. Our economy is red hot, and so we really needed to kind of cool off a bit so that housing prices can go down. Building prices can go down when we have more inventory and we have less of inflation that affects everything else. So stay diligent about your plans in real estate. If you're a buyer looking to buy, if you're an investor, or if you're just a seller looking to sell your home, stay diligent about what it is that you have in terms of a plan or goal for real estate, and don't get thrown off by what's happening right now. We really need the economy to kind of cool off a bit, but not slow down completely, because real estate as I said before, is a huge component of our economy. And so we need these transactions to still happen, but we just could benefit from a little bit less cost. So with that, thanks for checking in. I hope this helps you, and let's stay safe, and I'll talk to you soon.